All right, today we're diving into what is really a new frontier for building wealth: digital assets. We're going to break down why this is such a game changer for entrepreneurs and how platforms like Flippa are right at the center of it all.
So, here's our game plan. We'll start with the rise of digital assets themselves. Then we'll look at why Flippa is such a key player. We'll talk strategy, how to do smart due diligence, cover the buy, build, and sell model, and finally, wrap it all up by looking at how this fits into a modern investment portfolio. Let's jump in.
You know, for decades, when you thought about investing, you thought about stocks, bonds, maybe real estate. But what if the next massive opportunity for creating value isn't on Wall Street or in a physical building at all? What if it's online? That's really the core question we're digging into today. Okay, first step, the rise of digital assets. And look, this is so much more than just a trend. It's a fundamental shift in how we even define what a valuable asset is. We're really moving from an economy of brick and mortar to one of clicks and code.
So what are we actually talking about here? When we say digital assets, we're talking about real, functioning online businesses. Think about a content website that's earning ad revenue day in and day out, or an e-commerce store with a loyal customer base, a SaaS platform with recurring monthly subscribers, even a simple newsletter with a dedicated audience you can monetize. Each one of these is a revenue-generating machine that you can own and operate from pretty much anywhere.
Now, any new market needs a place to actually conduct business, a trusted exchange. And for digital assets, Flippa has really become that place. So let's get into why it's the go-to platform for buying and selling these online businesses.
I mean, just look at the contrast here. It's night and day. On the left, you have the old way of doing things. These murky, private deals that were super risky, really secretive, and honestly, out of reach for most people. But on the right, you have the Flippa model. It's transparent, it's driven by data, and it's open to a global market. This shift is what unlocked this entire asset class for pretty much everyone.
And this right here breaks down exactly how Flippa builds that trust. Take verified traffic insights. That's not just a claim from the seller. It's a direct link to their Google Analytics. You see the real data. Same thing with revenue. It pulls directly from platforms like Stripe or QuickBooks. You're not just taking someone's word for it. It's all about getting rid of the guesswork and minimizing your risk through, well, radical transparency.
Okay, so now you get the platform. Let's talk strategy. When you're looking to invest, you've really got two main paths you can go down. You can buy an early-stage asset, or you can acquire a more established one. Let's unpack the difference. The best way to think about this is like buying a house. On one side, you've got the early-stage assets. These are your fixer-uppers. They cost less upfront, and they have this huge potential for growth, but they need work, and they definitely come with more risk. On the other side, you have the established assets. These are your turnkey properties. They cost more, for sure, but they start generating predictable cash flow from day one with a much lower risk profile. Your choice here really depends on your budget, your skills, and what your ultimate goal is.
And speaking of risk, that's the big one, right? It's what holds most people back. So let's just tackle it head on. Smart due diligence isn't really about finding a way to avoid risk completely. It's about turning that uncertainty into a calculated, manageable decision.
And this is such a crucial mindset shift. You're not looking for a risk-free investment, because, let's be honest, those don't exist. You're looking to make a calculated one. Due diligence is your chance to really roll up your sleeves, ask the hard questions, and make a decision based on data, not just a gut feeling.
So here's your playbook. Number 1, verify the data. Don't just look at the screenshots. Actually check those analytics integrations yourself. 2, analyze the financials. Dig into that profit and loss statement. Is revenue going up or down? A huge red flag is a sudden, weird drop in traffic right before they listed it for sale. 3, be honest about the operations. How much time will this take to run? Do you have the skills? And finally, number 4, assess the growth potential. Can you see a clear, obvious path to making this thing more valuable?
So you've done your due diligence. You pulled the trigger and you acquired your first digital asset. Okay, so now what? Well, now we get to the exciting part: how to actively build its value and turn it into a seriously profitable investment.
This whole strategy is called digital asset flipping, and it's an active entrepreneurial approach. You're not just a passive investor waiting for the market to go up. You are a value creator. You go out, you find a business that has untapped potential. Maybe its marketing is terrible or its website is clunky. Use your skills to fix those problems, you grow the revenue, and then you relist it for a nice profit.
And a successful flip can actually happen way faster than you might think, often within a single year.
The first month or two, that's all about closing the deal and doing a deep dive. The real work happens in the middle, months 3 through 9. That's when you're optimizing, marketing, and growing that bottom line. Then, the final quarter is all about prepping the business for sale and finding its next happy owner.
Okay, let's zoom out for a second and look at the big picture. How does all of this, investing in digital assets, fit into a modern portfolio? The truth is, it's not just some weird alternative anymore. For a lot of people, it's becoming an absolutely essential piece of the puzzle.
And this quote right here, it just sums it all up perfectly. For years, this was seen as a kind of niche hobby for tech geeks. But today, it's a mainstream, practical, and incredibly powerful way to build wealth. You're making a direct investment in the digital economy itself.
So why does this matter to you? Well, first, it lets you diversify your money beyond the usual stocks and real estate. Second, you get to invest in a world you already understand. You're a digital native. And this is the big one. Unlike stocks, you have direct control. You can actually influence the growth of your investment. And you can do it all from your laptop, accessing a global marketplace of opportunities.
So, we'll leave you with this one question to think about. Is your portfolio truly built for the future? Because as the digital economy continues to grow, and it will, so will the importance of these digital assets. The only real question left is, will you be a part of it?